Hello and welcome to the channel, The Lazy Money Game. This channel is all about getting your lazy money to work so you can get lazy yourself at a later point in life. The way I want to do this or show it to you is simply by doing something called dividend growth investing. For all of you who are not familiar with the concept, I will explain it in detail throughout this video. So dividend growth investing is all about investing in companies that pays a dividend, meaning that they pay out percentage of the profit either on a yearly, a quarterly or semi-annually basis, and all the technical terms will be explained as well. The reason why I want to do this is simply just to show people how you can do it and how easily you can get started. The reason why I'm starting now in 2020 is because I found this app called Revolut. You can download it for your mobile phone, and if you're living in one of these countries highlighted here, you will simply be able to start doing your dividend growth investing, and you can actually start from as low as 100 Danish kroner, since that's all it takes to open an account with Revolut. And they allow you to buy shares without commission. However, there are of course some downsides, which we will go into in detail as well. The first limitation that I would like to highlight is you are only allowed to trade for $1,000 per trade, and if you start with the commission-free program, that means that you are only allowed to trade for a maximum of $3,000 per month. However, this should be sufficient to get started and get a grasp of what Revolut is all about. So the next thing that I want to highlight is even when you go for the commission-free trading account, there will be some expenses. The first expense will be an annual custody fee, meaning that you pay 0.01% of the market value of your entire portfolio a year, simply just for them to handle your account. And since you're trading US stocks, you will have to pay the Security Exchange Commission for every $1 million that you trade, which will be minimal when you start, since you're starting with small numbers. And of course, there's the fee to the Financial Industry Regulator Authority, also known as FINRA, which is charged for every stock and ETF that you trade, with a minimum charge of 1 cent per trade. One of the first things that you will encounter when you try to set up your account in Revolut is that you need to verify your identity, meaning that you need to take a picture of your passport, and you also need to take a selfie and add that. This is simply to allow Revolut to do what is known as KYC, or Know Your Customer. It's also referred to as customer due diligence. They simply need to verify that you are who you claim to be. So let's look at some of the positives for why I have chosen to use Revolut. If you use the standard user, you can get started by paying $0 a month. For that, you are allowed to do 3 commission-free trades a month, and those trades can be at a maximum of $1,000 each, meaning that you can actually start investing $3,000 per month. This should be sufficient for you to get a grasp of what Revolut is all about. At the same time, they are offering you to exchange your currency. For instance, for me, I have to change from Danish to US dollars, and they're doing that commission-free. And even better, they are actually offering you to do it at the interbank offered rate, meaning that you are not paying between 1% and 4% in commission to the bank to exchange your currency. So this allows you to invest even more of your own money. So to sum up, it's really easy to open a Revolut account. Buying and holding shares for Revolut is much cheaper than I have found it to be with other investment brokers. It offers a good choice of companies, even ones with very high dividend paying companies, which will be very beneficial for the strategy that we are going to implement. Fourthly, they are allowing for fractional shares, meaning that you don't have to have a ton of wealth in order to get started. Some of the cons are you can only trade US companies. Secondly, you don't get any investment advice from Revolut, meaning that you have to know a little in order for this to be a good deal for you. Thirdly, you can only do general investment accounts. You can't put in your pension fund or do an ISA or any sort of thing like that. So when you have finished setting up your account at whatever broker you decided to go with, you can actually get going with this dividend growth investing, which is actually all what this strategy is about. So here I have allowed to give you an overview of my entire holding. All of this has been started this year and I intend to invest more. I want to show what I have done simply just because I think it serves a very good educational purpose. You might be more wealthy than me, you might be less wealthy than me, that's actually not the important part. The important part here is simply just to show hands-on how this can be done. One of the tools that I like to use when identifying which stocks I want to buy is this webpage called Seeking Alpha. You simply just type in the ticker code or the company name, in this case Prudential Financials Incorporated. Then on the first page, in the summary page, you will simply just have your regular stock chart so you can see how much is the stock currently trading for. And over here you have a bunch of information like the earning per share, the price earnings, the dividend ratio, 52-year high, 52-week low. But what I like to focus more on is this dividend tab. In here you can simply see a lot of information about the dividends. First, I like to identify what is the current dividend I will get if I buy this stock. I usually want to buy stocks where I at least have a dividend of 3% or more. Next, I look at the payout ratio. This is somewhat of a safety for how likely it is that I will get my dividend in the future. I like to buy companies that has a payout ratio below 75%, unless of course you're talking about REITs, but that's a completely different story for a different episode. Next, I look at the dividend growth rate, and I like to see that they are growing the dividends, since that goes in line with the whole strategy of dividend growth investment. Second, I look at this pattern saying how long have they been growing their dividends for, in this case 11 years. Next, I like to actually take a deeper look into the dividend history and see how it is. So in this case you can actually see dividend by dividend, year over year, how it has been paying out, and this looks very promising. So you can see here there's slowly but surely increasing their dividend year over year. However, if you go to the All tab, then you will get a longer history, and you can see that if we go back to 2013, the dividend was actually higher. Thirdly, I like to look at this tab called the dividend yield. In here I simply see how much the forward dividend yield is compared to the 4-year historic average. I like to buy the stock when the forward dividend yield is above the 4-year average, meaning that I'm actually getting more for my money compared to the historic overview. Of course, if you go in here and look at the summary, you would be able to see that So that's it for now. That was the first episode of the Lazy Money Game. Stay tuned for more episodes later. Please leave a comment and remember to like and subscribe in order to support the channel. Bye!